Welcome all to the daily wrap here, and we've seen the dollar make a little bit of a push into this 97.89 area, and we've seen the euro under some pressure this morning. Um, we saw where Salvini was stating that there could be a huge fine placed on Italy for all the debt issues, and he'll fight with all his energy to avoid that or fight against that, and that put the euro under a little bit of a pressure. We actually had the bond market pushing much higher here earlier in the morning, so that had the euro a little bit under pressure. The key thing to me I'm looking at once again is here on the cash dollar index. And we're back up here to this 97.89. That's that big level that the market had not been able to take out, and then got above it, closed a couple of days above it, and then lost it, then came back, tried to make a stab, couldn't take it, reclaimed it, looked like it's ready to go to the stars. And then on Thursday, we had the poor manufacturing data, the worst in nearly a decade. So with that, the buck lost its momentum. We made a note here into the agent analysis indicating the dollar index closed below the 97.89. Now this was after this past this week, after reclaiming the key weekly level. Thursday's U.S. manufacturing growth stumbled to a near decade low, reigniting thoughts of a possible cut in the fall by the Fed that in turn undercut the buck's upside momentum. Initial support is 97.20 with a potential move to 96.63. Now, the thing is that whether you believe the Fed's going to cut or not going to believe, I don't think that's as much important as it is it has to be factored in. The market's going to price that in. 1 or 2 days won't make a big difference. We're seeing a little bit of pressure. As I said, with the euro, we had the Italian concerns. But as I said, the key would be, can we maintain this? My thoughts were that we wouldn't be able to, because then from a bigger term perspective, as the China-US thing continues to weigh, and we're actually seeing effects, like I said, in manufacturing, the worst since nearly 2009, that, the market is already pricing in and some of these lower prices. And then also, if you take a look at where we are, we'll move into that real quickly. Look at the 10-year here. So one of the reasons the dollar's been able to be so strong is when rates were going higher. Well, we now got the rates going the opposite direction, and the least dirty shirt in the hamper and all this other stuff, that works fine. But when you've got things going a completely different direction, as the differential between U.S. rates and others starts to fall back, remember, that's been the idea, that we had that chasm between the other central banks. And whether or not you think, oh, well, the ECB is going to go on and, have to, generate some more stimulus or whatever. But here's the problem is we're going to be going back in the same direction too. I'm saying as far as the interest rate differential, and whether or not we price in, whether or not we have a Fed cut or not, you have to factor that in, is that this is one of the key stools for the dollar has been these interest rate differentials, and we're already losing this here. So we're not seeing that schism, other central banks going one way, U.S. going another way, kind of seeing this going, whether or not the Fed does anything. The market in here, we look at the 10-year interest rates, is, going south of the border. It has been going south of the border. We're not talking about a 1 day or 1 week. It's just been going lower and lower and lower. Okay. So that takes out one big stool for the dollar. And I still think we're, still have the opportunity to eventually break lower here in the S&Ps. Now, getting back to the main screen, so a lot of times these markets, they don't just shift on a dime or whatever. Sometimes it takes a while, especially in a market that's been, has been bullish for quite some time. But like I said, I don't think the dollar is going to come unglued, but I think that we'll have to come down here And potentially down here, what I'm looking potentially is a move down here to the 38%, which would confluence with this trend line and this level here, 96.72. Now we'll see whether or not that comes to fruition, but it'd be pretty tall order for the market to regain the 97.89, which is a weekly level, and also the 61% of the overall move from 88.28, 88.29 to 103.83. Looking on here with the euro. We'll see what happens with the euro here. We'll find a little bit of support down here. Our bias chart support was at 1165. Let's go on and put this up here. And last week we talked about a trend line here, and we came up to this trend line. We actually had a resistance at 1216, but our bias chart was at 1220, and it ran out of gas right here at 1215. And we've kind of rolled back over. But that being said, we're into a nice little bastion of support here, all the touches here. So we're kind of holding this 1165. It's not so much to me about what's the euro's done, although I think we've pretty much thrown everything but the kitchen sink at the euro. And don't forget, we've already had this low and this low, which took it out, and we came back. So I think that the market could end up pushing hard, but I think it's more about the dollar potentially being repriced lower. We'll see whether or not that plays out. Looking here with the cable. We're still bucking, holding right near these lows here. Not a whole lot here. This 2644, I believe we have as our bias chart support today. We'll move this here. See the 1165 for the euro. We had that since the European crossover. 2644. They've just been sitting here very, very, very quiet. Although the market, I don't know how much more damage it can do to the downside. And I think there's bids below this here with that 2598 level, and 2590 being the 78%. We know how much the market likes that. Looking at the Aussie, kind of holding its own here. I thought we may have been able to get a bigger jump here. There's this issue with the iron ore, and we've seen prices really jump up, but I thought we would have seen a little bit more follow through here in the Aussie. So we haven't. Now here's a problem though. We have the RBA coming up this next week. So Philip Lowe had already said that they were going to go on and consider a rate cut in June. Didn't say they were, but they were going to consider, hey, I know that some key notables that follow the Aussie data, like such as Westpac, they're looking for 3 cuts this year. So that's really going to take the wind out of any upside sales that we could get potentially for the Aussie. So probably why we're seeing not very much of a very good reaction here. One surprise here, we'll go and move into that. Has been the peso here. Now we broke this trend line, and we've been looking for the peso to do something the last 2 weeks, and it hasn't. And when we looked at it overall, we were looking at the big ranges, 1892.5 and 1923.6. That 1923.6 has really kept the market in check, but we've moved a little bit higher. Today we had our buy chart at 1914. We backed off a little bit, and then we reasserted and came through. But these are the big levels, 1892, 1923.6, and maybe we're starting to finally see a little bit of a push up here. We said that when we looked at it here, indicated for the bias chart analysis, the dollar peso remains mired above the downtrend line, lacking momentum. Support is 1892 with resistance at 1923.6. The reason we had them so far out is because we've basically done nothing over the course of these last 2 weeks when it looked like we were really going to start to take over. It's remained in a buy mode, I will give it that, but we just hadn't done anything. But we're starting to see a little bit of movement here going forward. Looking here with the dollar yen. We did go in and make it down here to the pivot, and we stayed there at the pivot, that 927. Dollar yen has returned to the pivot of 927. Next level support is 875. The market is oversold on a short-term basis. Resistance is 1005. From a bigger term perspective, 1005. But our bias chart support resistance today for the dollar yen is 970. We've been up as high as 962. They can still push up a little bit higher towards this 978, but if you're looking longer term, this thing is probably going to eventually roll over. But we've come back into this very important 927 pivot. You can see how important that area has been. for a long time here with the dollar yen. Go and take a look here, and also the Canadian dollar. Let's keep an eye on this Canadian dollar. This thing has been something else. It's come up to and we haven't seen a whole lot of movement today, so be a very short wrap up. But we put it here in the Canadian dollar. The elusive 35 level for the dollar CAD has been just that, elusive. Somewhere along the line, I believe we will hit a trap door that can lead us to 32.95 with a pause at 33.45. Resistance remains the daily close of 35.04. We've seen that here. We've made multiple stabs. We said, multiple times it's popped its head above the foxhole and got shot right back down. We'll see what happens. I mean, crude's under some pressure, so pushing this up, but we'll have to see. I mean, this thing's just been sitting here like forever and a day. Obviously, if it were to break above, potentially we'd be looking at 138. When at 138, we'd be just taking the difference with here, this whole range here, from here to here. Let's see, about maybe 2.25. So probably take us up to about 37.25 if you took this range and popped it up here to the upside. But we'll see what happens. But to me, it feels like it'd be susceptible. But once again, that all going to play out to whether or not we see the dollar correct a little bit. And we may not see that till tomorrow. Moving here into the Euro Aussie, we have seen this gone and pair back. Take a look here. With this trend line we've looked at. But you got to be a little bit cautious because the bulls are still firmly in control. Obviously, the euro a little bit under some pressure. Open the door to let this go down. But we said, don't overstay your welcome. Don't get greedy on the downside as bulls remain well in control. We haven't been able to secure the upside traction above 62.28, which allowed this market to correct. But be wary. As I said, with the RBA, downside is going to be rather limited, but we were able to break and pull this back a little bit. And with the euro yen here, euro under some weakness, the yen still strengthening. We certainly have gone and pulled back here. And we're actually, today's bias chart here we have is actually at 21.95. If we do get that, let's go, them to pull clean house a little bit. $21.95. It looked like we may try and make a hold here because we made multiple stabs, as we were saying down here. But still, the euro, as I mentioned, is under some pressure. But this whole area is not a bad area here. We'll take a look what happens here. 21.95. The market needs to go in and push up, and resistance really won't come up till about 22.65 up in here. And if we are able to go in and get a close, but we'll have to see a turnaround, not only in the yen but in the euro to make any real difference here. And let's take a look here with the Aussie yen. You can see it's been trading relatively quiet here overall. Looking at the daily with the Aussie yen. Aussie yen is defending the 75.31 level. Confluence with 75.56, which is a 50%. A daily close above 76.09. Just take us about 20 pips away, maybe a little bit less than that. Daily close above 76.09 will allow a test of resistance for 76.96. But the market's staying trading relatively quiet. It's a relatively quiet session overall. And looking here with the sterling versus the odd. Sterling odd is closed below the 81.14, allowing for a slip back to 82.53 with initial support at 83.16, resistance 84.58. So you can talk about the 82.53. Well, we've just about made it there, almost, if you look here. There's that 82.53 with the break, And today's low's been 82.67. So we were doing this analysis over the weekend before we came into our holiday weekend. And lastly, we'll just take a quick look here with the Euro Kiwi. Okay, the Euro Kiwi is pulled back a bit from the major 71.31 level. Confluence was 71.14 to 50%. The market remains stout. Better opportunities elsewhere if one is bearishly inclined the euro. So we're still close here. Here's at 71.14 to 50%, 71.31, this key major level. You can see that coming across. We've divvied a bit, but the market, as I said, does remain stout. If you're bearishly inclined the euro, I think you can find much better opportunities than this. It's been a relatively quiet session overall as we come into post-holiday trading. Dollar index is still trying to hang on to this 97.89. To me, that's the big kicker right here, the 97.89 here. Going back here before we shut it down. And it's going to be, as I mentioned to one of the guys in the chat room, it's going to be a tough row to hoe for this dollar index here. Now, looking here on the 2-hour chart, this whole area right in here. So it'd be pretty tough if we can get past this area. Now you still got that 97.89, but this all look a lot of good volume in here. And this isn't like a 5 or 15 minute chart. That's a 2-hour chart. So you got a lot of volume in this whole area here. Maybe we'd be able to stretch it up and get up to 98, but 97.92, 97.99, as I mentioned before, pretty tough row to hoe to go on and get past that when you're talking about the 97.89. We shall see what happens. Probably won't resolve itself till tomorrow. That's all we've got here on the wrap up, and thanks for joining us.